right now is Baltic Capital Markets Chief Strategist Kathryn Rooney Vera. And being here, Kathryn, kicking things off with you. Want to look at oil prices extending their run. Both Brent and West Texas crude hitting multi-year highs. Some traders are betting on Brent hitting $200 a barrel by December 2022. Your thoughts and the impact on this?
Well, certainly there's additional upside potential. I would say it's offset, though, by the policy focus on decarbonization. So we have that on our side for prices at the pump to maybe level off at some point in the near future. But really what we're talking about here, Maria, is a massive rebound in travel, in demand. We're entering the winter months in Chicago and New York. There's going to be additional necessity for energy here. And with the shortage of gas and coal, that's adding fuel to the fire with oil prices ascent. What I'm looking at, Maria, is the lack of investment and in exploration and production, not only from OPEC, but from the shale component of the U.S. So if we don't get additional investment, not only from OPEC, which is, of course, way below its production limit due to the lack of investment in exploration and production, then we're going to see prices very high for an extended period of time. My investment bet here, Maria, is to focus on energy and renewables. That's where I think, not only under the Biden administration, but a multi-generational policy focus is going to take hold over the course of the next 10 years even. So I'm telling my investors, look, buy into green energy, buy into renewables. That's where I think the policy focus and indeed money is going to flow over the course of the coming years.
So if money flowing into oil securities, oil ETFs, is that going to be impacting the price? And do higher oil prices, Kathryn, impact the broader economic growth story?
Well, of course, if you get, we've already had prices at the pump doubling. So if we continue to see that, Maria, then we're going to get some slowdown with regard to consumption and the like. It is effectively a tax. And if we have additional taxes coming from the government on other things, combined with a doubling in the price at the pump, then that could curtail economic activity at a point where we don't want that to happen. Remember that we've had extraordinary growth this year because of low base effects. Next year is unlikely to see that type of growth. So if we have oil prices remaining high and continuing to move higher, then of course that's going to have it's going to be a headwind on economic activity. That's why I think we need to look in alternative energy sources and put our money to work there.
Yeah, and some alternatives, people are sort of pushing out the risk curve. Thank you so much, everybody. Great word on Wall Street.